Hello everyone and welcome to the Catalyst Report. My name is Brandon Haefele, the CEO of Catalyst Mortgage, and today we are at the Western Secondary Market Conference for the California Mortgage Bankers Association in San Francisco. And I'm very excited today about this episode because we have a very special guest, Chris Boyle with Freddie Mac.
Aren't you sweet? Thank you so much for having me.
Absolutely, I'm very excited that you're here. And you know, Chris, you have a very long title. So if you wouldn't mind, tell us what you do at Freddie Mac.
I do. So let me just sum it up in a couple of words. I'm Freddie Mac's Chief Client Officer.
Okay.
So everything to do with our clients really falls under my purview. So not only our sales organization, but our marketing organization, and most importantly, our customer experience. So that's generally, aside from the long title, that's how you describe what I do at Freddie Mac.
Very important role, and the Catalyst Report is about educating consumers and really bringing it down to the understanding of what the mortgage business is about, what the processes are, and really to make people understand how to purchase refinance, not just now, but maybe in 5 or 10 years from now. And if you wouldn't mind, people hear about Freddie Mac, but really don't know what Freddie Mac does. So could you give us some background? What does Freddie Mac do?
So first and foremost, we're the partner to our lenders. We provide access to credit and liquidity to the capital markets. Now, what does that really mean? Essentially, we have a lot of lender partners around the country, whether they are large banks, independent mortgage banks, credit unions, savings and loans. All of those folks who make loans only have so much capacity or so much capital to lend. So what we do is we buy those loans from those entities, we securitize them, and we sell them in the capital markets. We return then that cash back to the market so your lender can make the next loan to the next borrower. In a nutshell, simply, that's really what we do. We're an insurance company. We wrap these loans in bonds called Freddie Mac PCs, and they're sold and distributed around the globe. And that's what provides liquidity to America's home lending market.
Well, I think it's important, and it really is. It's such an important role because you go back before Freddie Mac and Fannie Mae were around. Really, independent the banks directly had to lend the money, and I think that it really has opened it up for more companies to be able to get into the marketplace, from small mortgage bankers that become a smaller lender to then, of course, the big companies to be able to expand further. My question, how would you describe how Freddie Mac supports homeownership besides just doing the money? What other programs is Freddie Mac doing or in the process of doing supporting homeownership?
So we work with lender partners to understand the primary market being the borrowers that we're all serving. So working with lenders and working with the marketplace generally, we look at what the demographic trends are in the marketplace, who the emerging homeowners are, the borrowers of the future, if you will. And working with our lenders, working with big data and analytics, we can see who it is, what the trends are in terms of coming to market to actually want to buy a home. Let me give you an example of, and so what we do then is we create products and programs that serve those borrowers through our lender partners. The most recent example is we do have a suite of products, which is we call Home Possible, and Home Possible requires a 3% down payment. One of the great myths in housing from a consumer perspective is that you need this very large down payment. So a lot of folks spend a lot of time saving up 20% or more to actually get into a home. Meanwhile, they're renting and they're paying their rental payment, so the equivalent of that is a mortgage payment. So we are doing lower down payment mortgages. Our Home Possible suite actually serves low to moderate income borrowers, and the guidelines for it are really tuned to those types of borrowers. We also came out with a new product recently, which is also a low down payment product called Home One. And Home One is, again, another 3% down product. Maybe the borrower themselves doesn't qualify for the Home Possible suite of loans, but we've put some new parameters together to really help those who want to own a home earlier in the process without saving up those large down payments. They can get in. We've done it responsibly, we've done it sustainably, and we're providing access to credit. So those are two examples of how we serve our lenders as they serve borrowers and what borrowers need in the market to actually achieve their dream of home ownership.
No, and really the 3% program, is something that's so good for first-time home buyers, and I think there's a common misconception on default rate. People out there always say, when you have lower down payment programs that, a borrower might, default, and really even with a 3% or any of these programs, that's not the case. I mean, really, they're good programs, they're underwritten efficiently, and I think that people don't realize how many options are to purchase and how flexible things are, still responsibly, like you say, and that it is definitely a great program. Where does Freddie Mac see the market in the next 12 to 24 months? Where are we seeing things going? Up, down, sideways? What do you see?
So I don't know. Here at the Western Secondary, our chief economist gave a wonderful talk yesterday. So as economists will, they say it could be this way, it could be that way. If you look at most of the data, the economy itself, there is a lower than 50% percentage of risk that we'll have some sort of another recession. So I think it's a fairly lower risk. It's not a high risk. So we expect the market, I think, to be generally pretty stable. I think the challenge that we find in home ownership today, assuming a stable market and a somewhat stable economy, is supply. There's just not a lot of supply in the market for those aspiring to home ownership, particularly those who want a starter home or an affordable home. That's one of the things at Freddie Mac that we're working on, is focusing on those low to moderate income and access to the right kinds of homes for them.
Yeah, and it definitely. I mean, I think every marketplace, especially even in the California region, we have seen inventory being such a problem and people really either being priced out, and especially in the Sacramento region, we've seen people go from the Bay Area, now they're purchasing in Sacramento, which of course is tightening for the local first-time home buyers.
Yeah.
So that definitely, we've seen that in this region as well.
That house price appreciation is again on a slope of going up where real wages are like this, and that creates a gap. It creates a gap in affordability. And so we watch that very carefully, and I think California is certainly one of those markets where house prices have gone up pretty dramatically, and it takes a lot of people out of the buying realm if they can't really afford those increasing prices.
At the same time, just when we're talking about qualifying, what are you seeing with the impact of student loans on mortgage? What have you been seeing with that?
So there certainly has been a lot of focus on student loans, and while there are some, I think there are less than people think. I also think there are a lot of programs. I really applaud employers in this day and age. They're realizing, again, looking at the demographics of who's coming into the market, how well educated they are, and the cost of that education. A lot of them are providing support to their new employees in the way of grants for employment. So part of your employment package may be that they will help you to pay off your student debt over time if you make a commitment to their firm. And we're looking at accepting those kinds of things in how we qualify borrowers and what their income looks like. So student debt has been an issue, and certainly something that I think both lending community, employers, and Freddie Mac are working in tandem to make sure that we've got the right parameters to make sure that it's not an impediment to home ownership.
Right. So, there's some programs that you've been changing and stuff, and you're trying to streamline costs for consumers. So what's something that recently has Freddie Mac been doing to save the consumer some money?
So huge needle mover for consumers is our new ACE program. We're very excited about it. Again, bringing data and analytics to this business has really driven costs down for consumers. We have a program we call ACE that we make available to our lenders. And what ACE really is, it is an alternative to a full appraisal. So on average across the country, now appraisal costs vary from region to region, but on average about $500 in the transaction is spent on an appraisal. For a large percentage of a certain segment of our population, we actually don't need a new appraisal. If you think about it, Freddie Mac has lent on these homes time and time again as they've sold and been resold, et cetera. So we have a lot of data and information. So working together with the appraisal community, there's a certain sort of percent of loans that we don't all have to look at it again in the same way. And appraisers can spend their time then on those properties that we do need them to look at, and consumers who have a home that qualifies for ACE can save as much as $500 in the transaction. That is a lot of money when it comes to the process, and it also can take as much as 10 days out of the timeline to actually close on the home. So there's a lot of innovation coming to the market, using data and analytics together, partnering with our lender partners, using automation in a way that we never have. Our job together really is to try to take out paper, costs, time, and streamline, make it simple for people really to understand how to get a home and make it painless, if you will.
No, absolutely. And, I would say that what you hit on, just the time frame, 10-day, if you can close a transaction 10 days, sooner, you're talking a lock extension. So really that you might be saving, a 15-day or 30-day lock versus a 45-day lock, right. When a consumer locks loan. I think that's so huge because that will save consumer really that $500 now might be an extra $200-300 more on top of that.
And even if they don't want to close right away, they know they can. And that gives them such great comfort as well, right? So they have the options then and they know, but they've also got that certainty, and that's really what it's about. Because getting into this process, demystifying this process for consumers is what you and I are all about.
Absolutely. Recently Freddie Mac published a study about people and borrowers leaving money on the table. Could you elaborate on that a little bit?
Yeah, so it was kind of fascinating as we looked at some of the data in the marketplace and who's coming to market. There was a large percent of consumers who said they really only ever spoke with one lender, and for a variety of reasons, they really didn't go out and seek information. They didn't look at the various options that they have. Now, generally speaking, lending is lending, but there are different lenders who specialize in different products and programs. They offer different services, and it was surprising to us that they just looked at one lender, and that came from maybe a referral from a friend or a business partner in the transaction who said, well, work with this person versus working with that. So that was a bit of a surprise to us that they're really not shopping and doing their homework and getting educated on what their options are. So that really led us to believe and understand that gets back to the I need 20% down, the myths of the industry, that you can only go here or only go there. There's one right path to getting that home ownership. There are lots of lenders, lots of opportunities, and lots of specialization. So being able to really understand the key components of the transaction and educating consumers together with our lenders is really something that we owe to the housing market in the United States.
Yeah, I really agree with what Freddie Mac's doing in educating consumers. It's so important. If you could leave both one piece of advice that you would give a borrower, what would it be?
So home ownership is near and dear to my heart. It is one of the most important things and values that we have here in the United States. And I think for those who are qualified borrowers, there is a path to home ownership. And it seems like a large, scary thing to do. It seems like a big transaction because I think we've overcomplicated it. At the end of the day, if you aspire to home ownership, you need to really reach out to the experts in the field. That's what we're here for, to tell you how to get a loan, how to go through the process, what to expect, whether you actually qualify or not, so that you know what your options are, you know what your choices are. At Freddie Mac, we also have a line of business we call multifamily. So we finance apartments and multifamily dwellings as well, so there's nothing wrong with rental. But if you aspire to home ownership, do your homework, reach out, get information, demystify this process, and know for yourself that when and if your family wants to have a home or you individually want to have a home, you know what the process is going to look like, you're educated, and you can do the right economic transaction for your family. So get educated, do your homework.
Chris, I can only say thanks for coming. I really appreciate it. I appreciate you being a part of this and sharing this information with our viewers.
Well, thank you for all you do for America's homeowners as well. Greatly appreciated.
Thank you. And if you have information that maybe we haven't covered today or you have questions, please feel free to post it on our website at thecatalystreport.com. Also, there's a lot of information and a lot of videos on there about different topics that you can learn more about how to purchase or refinance or just learn about the mortgage industry. So again, thank you for joining us. Until next time.